Question 1. Which of the following is a primary responsibility of an insurance underwriter in the property and casualty insurance sector? A. Determine the premium for life insurance policies. B. Assess risk factors and classify applicants based on risk. C. Conduct medical examinations for health insurance policies. D. Set up claims handling procedures for commercial policies. Answer: B. Assess risk factors and classify applicants based on risk. Explanation: an underwriter's primary responsibility is to assess risk factors such as the applicant's health, location, or loss history to determine the acceptability and classification of risk. In the context of property and casualty insurance, this includes evaluating property condition, the applicant's claims history, and the risk of natural disasters like floods or wildfires, critical for ensuring appropriate pricing and coverage. Underwriters do not set premiums for life insurance, which is addressed by life underwriters, conduct medical exams, health insurance role, or handle claims, which falls under claims adjuster's responsibilities. Question 2. Mr. Thompson, a prospective policyholder, has submitted an application for homeowners insurance. His home is located in an area known for frequent tornadoes. His property is in excellent condition, but he has had multiple claims for water damage due to flooding over the last 5 years. What should the underwriter focus on in assessing Mr. Thompson's application? A. The frequent claims for water damage and the potential for increased future risk. B. The general condition of the property and its proximity to tornado-prone areas. C. The premium Mr. Thompson is willing to pay to determine the underwriting decision. D. The absence of fire damage in the last 5 years and previous claims for theft. Answer A. The frequent claims for water damage and the potential for increased future risk. Explanation: when assessing Mr. Thompson's application, the underwriter should primarily focus on the historical claims for water damage due to flooding, as this suggests an increased risk of future claims. Despite the home being in excellent condition, a history of flooding claims indicates a higher level of risk that must be evaluated. The location of the tornado-prone areas also plays a critical role, but may not be as immediate a concern in this scenario as the history of water damage. Underwriters would be concerned with risk factors that influence claims frequency and potential future loss exposure, including historical claims data, to assess the overall insurability of the property. Question 3. Which of the following is most likely to be considered an unfair underwriting practice under Oklahoma law? A. Using credit scores to evaluate an applicant's likelihood of filing claim. B. Refusing coverage to homeowner due to prior claims resulting from natural disaster. C. Using an applicant's age and marital status to adjust premium rates. D. Offering lower premium to an applicant with clean claims history. Answer: C. Using an applicant's age and marital status to adjust premium rates. Explanation: under Oklahoma insurance laws, unfair discrimination based on factors like age, gender, or marital status is prohibited in underwriting practices. Premium adjustments based on age and marital status could lead to discriminatory practices, which are against the regulatory standards, while credit scores may be used to evaluate the likelihood. Future claims in property and casualty insurance underwriting. With proper disclosures, it is unlawful to use demographic factors like age and marital status in a discriminatory manner to determine premiums. Refusing coverage for claims arising from natural disasters or offering premiums based on claims history is generally allowed under the proper risk classifications and regulatory guidelines. Question 4. An underwriter has just received an application for a new auto insurance policy. The applicant has a recent history of 3 accidents, 2 of which were caused by speeding and the other by driving under the influence of alcohol. What is the underwriter's primary concern regarding this applicant? A. The applicant's credit score and history of loan defaults. B. The applicant's driving history, including the nature of the accidents. C. The applicant's vehicle model and its safety features. D. The applicant's employment status and income level. Answer: B. The applicant's driving history, including the nature of the accidents. Explanation: the underwriter's primary concern will be the applicant's driving history and the nature of the accidents. Speeding and driving under the influence (DUI) are considered high-risk behaviors that increase the likelihood of future accidents and claims. This directly impacts the underwriting decision, as individuals with history of such behaviors are more likely to experience future losses. Credit score, vehicle model, and income are not as immediate factors when assessing driving risk, although they may be considered later in the overall underwriting process. Question 5. Under the Oklahoma insurance regulations, which of the following actions would be deemed an unfair underwriting practice? A. Offering discounts based on a policyholder's claims-free record. B. Using an applicant's previous claims history in determining underwriting eligibility. C. Denying coverage based solely on the applicant's zip code. D. Offering coverage for high-risk business with strict underwriting terms. Answer: C. Denying coverage based solely on the applicant's zip code. Explanation: denying coverage solely based on the applicant's zip code is considered an unfair underwriting practice under Oklahoma law, as it can be seen as discriminatory. Zip codes often correlate with high-risk areas, but basing underwriting decisions solely on geographic location without considering other risk factors such as property condition is unfair. While it is accepted use claims history or offer coverage with specific terms for high-risk businesses, using zip codes alone to deny coverage violates consumer protection regulations. Question 6. Mr. Allen is applying for health insurance. His application indicates that he has recently been diagnosed with a chronic illness that could lead to significant medical costs. As the underwriter, what is your primary role in this case? A. To approve the application based on Mr. Allen's willingness to pay higher premiums. B. To consider his medical history and determine if he qualifies for coverage under the policy's guidelines. C. To deny coverage due to his chronic illness, as health insurance policies typically exclude pre-existing conditions. D. To evaluate his risk level and suggest alternative coverage options outside of standard policies. Answer: B. To consider his medical history and determine if he qualifies for coverage under the policy's guidelines. Explanation: as the underwriter, the role is to evaluate Mr. Allen's medical history, including the chronic illness, to determine whether he qualifies for coverage under the insurance policy's guidelines. Insurance companies may offer coverage for individuals with chronic conditions, but they typically assess the risk involved based on facts such as severity, treatment plans, and overall health status. The decision to approve or deny coverage is based on the guidelines and underwriting policies of the insurer, which must align with state regulations that govern fairness in underwriting. Question 7. An insurance company uses an automated underwriting system that assesses applicants based on a variety of factors, including credit score, age, and location. What is a potential drawback of relying solely on this system for underwriting decisions? A. It will ensure all applications are processed within the fastest time possible. B. It may overlook important human judgment in evaluating complex cases. C. It eliminates any potential for fraud detection. D. It guarantees a fair underwriting process for all applicants. Answer: B. It may overlook important human judgment in evaluating complex cases. Explanation: while automated underwriting systems can speed up the process and assess risk based on multiple factors, they may overlook the nuances of complex cases where human judgment is necessary. For example, an applicant's individual circumstances or rare risk factors may not be fully accounted for by an algorithm. Automated systems can also unintentionally perpetuate biases in underwriting if not carefully calibrated, leading to unfair outcomes for certain applicants. Therefore, while automation can be helpful, it must be used in conjunction with human oversight, especially for more complex or unusual cases. Question 8. When determining the premium for a commercial property insurance policy, which of the following factors would have the most significant impact on the premium amount? A. The applicant's annual revenue. B. The physical condition of the property and its loss history. C. The applicant's employee benefits package. D. The geographical location of the applicant's business. Correct answer: B. The physical condition of the property and its loss history. Explanation: the most significant factors affecting the premium for a commercial property insurance policy are the physical condition of the property and its loss history. A property in poor condition or one that has experienced frequent claims in the past is considered higher risk, leading to higher premiums, while the geographical location can influence certain risks, e.g. flood or crime-prone areas. The condition of the property and its claims history are directly tied to the likelihood of future losses, which insurance premiums are designed to reflect. Other factors like revenue or employee benefits generally have a lesser impact on property premiums. Question 9. Which of the following best describes the role of an underwriter in the process of risk retention? A. The underwriter decides whether to pass the risk to a reinsurer or accept it within the insurance company. B. The underwriter calculates the total value of claims paid by the insurer. C. The underwriter sets up a claims management team to handle retention risks. D. The underwriter monitors the financial stability of the insured's company for retention decisions. Answer A. The underwriter decides whether to pass the risk to a reinsurer or accept it within the insurance company. Explanation. In the context of risk retention, the underwriter assesses whether the insurer is willing to retain the risk internally or pass it to a reinsurer. This decision depends on the insurer's capacity to handle potential losses and the overall profitability of retaining or transferring the risk. The underwriter's role involves evaluating tolerance and determining the most appropriate strategy for managing large or high-risk policies. The other options do not reflect the underwriter's direct involvement in retention decisions. Question 10. Under Oklahoma law, what is one key factor that an underwriter must consider when evaluating commercial property risks? A. The applicant's general business practices and financial stability. B. The applicant's personal health insurance coverage. C. The applicant's specific medical history. D. The applicant's ability to pay higher premiums to secure coverage. Answer A. The applicant's general business practices and financial stability. Explanation. In commercial property underwriting, the underwriter must assess the applicant's business practices and financial stability. This includes evaluating how well the business is managed, whether it has adequate financial resources to recover from a loss, and how it mitigates risks. The business's financial health directly impacts its ability to withstand losses. Personal health or the ability to pay higher premiums are not as relevant to commercial property underwriting decisions. Question 11. What is the primary role of underwriting guidelines in the underwriting process? A. To eliminate human judgment and automate all decisions. B. To ensure consistency and fairness in evaluating risk. C. To guarantee that every applicant receives coverage. D. To increase the insurer's risk exposure and maximize profits. Answer B. To ensure consistency and fairness in evaluating risk. Explanation. Underwriting guidelines serve to maintain consistency and fairness by providing a standardized framework for evaluating risk. These guidelines ensure that underwriters follow clear and objective criteria, which helps avoid discriminatory practices and improves the accuracy of risk assessments. While automation and profit maximization may be goals of underwriting, the purpose of guidelines is to promote fairness and consistency. Question 12. Mr. Williams has submitted an application for homeowners insurance. The property is located in an area prone to frequent flooding. What is the underwriter's primary concern in this situation? A. The cost of insuring the property. B. The applicant's credit score. C. The risk of water damage and related claims. D. The applicant's claims history from previous insurance providers. Answer C. The risk of water damage and related claims. Explanation. The underwriter's primary concern would be the risk of water damage and related claims due to the property's location in flood-prone area. This would significantly increase the likelihood of loss and therefore claims. The underwriter must evaluate whether the policy can be written with appropriate coverage terms or if additional flood insurance is required. Factors like the applicant's credit score. Past claims history may also be considered, but flood risk is the central issue in this scenario. Question 13. In the context of underwriting, which of the following would be considered? A moral hazard. A. A homeowner installing a state-of-the-art security system after purchasing insurance. B. A business with a high employee turnover rate applying for workers' compensation insurance. C. Policyholder reporting higher than actual loss to inflate claim. D. An applicant's medical history indicating previous heart disease. Answer C. A policyholder reporting a higher than actual loss to inflate a claim. Explanation. Moral hazard refers to the risk that an insured person may engage in fraudulent or dishonest behavior knowing that they are covered by insurance. In this case, inflating a claim is a clear example of a moral hazard. Other options describe situations that do not involve dishonest behavior but are part of the risk assessment process, such as employee turnover or medical history. Question 14. Which of the following actions would most likely lead to adverse selection in the underwriting process? A. Offering discounts to healthy policyholders. B. Accepting applications from high-risk individuals without proper risk assessment. C. Using predictive modeling to evaluate applicants' likelihood of future claims. D. Requiring medical exam for all life insurance applicants. Answer: B. Accepting applications from high-risk individuals without proper risk assessment. Explanation: adverse selection occurs when high-risk individuals disproportionately apply for insurance, leading to an imbalance where the insurer ends up insuring too many high-risk applicants. If the underwriter fails to properly assess risk, they may unintentionally accept more high-risk individuals, which is a prime example of adverse selection. Predictive and medical exams help avoid this problem by ensuring the insurer makes more accurate risk assessments. Question 15. Which of the following factors would be most relevant when underwriting a commercial property policy? A. The applicant's previous medical history. B. The business's operations and fire safety measures. C. The applicant's marital status. D. The applicant's social security number. Answer: B. The business's operations and fire safety measures. Explanation: when underwriting a commercial property policy, the underwriter would focus on factors such as the business's operations and fire safety measures, as these directly impact the property's risk. Business's operations can influence exposure to fire, theft, or liability risks. Medical history or personal details such as marital status are not relevant for commercial property underwriting. Question 16. What is the purpose of using actuarial data in underwriting? A. To increase the number of applicants accepted. B. To calculate premiums based on the risk of loss. C. To ensure that all applicants are treated equally. D. To ensure compliance with state-specific insurance laws. Answer: B. To calculate premiums based on the risk of loss. Explanation: actuarial data is used to calculate premiums by analyzing the statistical likelihood of certain events occurring. E.g., claims accidents. Actuaries use this data to assess the risk of loss associated with individual applicants, which helps determine appropriate premiums. This process ensures that premiums are fair and commensurate with the level of risk. Question 17. Mr. Black is applying for an auto insurance policy. He has a history of multiple speeding tickets and a recent DUI conviction. What is the most likely outcome for his application? A. His application will be approved with standard terms. B. He will be offered coverage with a high premium and exclusion for DUI-related accidents. C. His application will be approved, but only if he completes a defensive driving course. D. His application will be declined due to his history. Answer: B. He will be offered coverage with a high premium and exclusion for DUI-related accidents. Explanation: given Mr. Black's history of speeding tickets and DUI conviction, he is considered high-risk driver. The insurer will likely approve his application, but at much higher premium due to the elevated risk. The insurer may also impose an exclusion for accidents resulting from DUI, while his application may not be declined outright, subject to increased scrutiny in terms. Question 18. Which of the following is an example of a physical hazard in underwriting? A. A property located in a flood zone. B. A policyholder's poor driving history. C. Business with employees prone to workers' compensation claims. D. Policyholder with history of fraudulent claims. Answer: A. A property located in a flood zone. Explanation: a physical hazard refers to a tangible factor that increases the likelihood of loss. In this case, the location of a property in a flood zone increases the risk of damage due to flooding, making it a physical hazard. The other options involve moral or behavioral hazards, which are related to the actions or behaviors of individuals rather than physical conditions. Question 19. An underwriter is reviewing an application for commercial liability insurance. The applicant has a history of multiple workplace injuries and several safety violations. What should the underwriter be most concerned about? A. The applicant's revenue and financial performance. B. The applicant's risk exposure due to poor safety practices. C. The applicant's location and its impact on liability coverage. D. The applicant's use of automated underwriting systems. Answer: B. The applicant's risk exposure due to poor safety practices. Explanation: the primary concern for the underwriter would be the applicant's risk exposure due to poor safety practices. History of workplace injuries and safety violations indicates higher likelihood of future claims, which directly impacts the underwriting decision. The applicant's revenue and financial performance are important but secondary considerations in this case. Question 20. Which of the following is A key benefit of reinsurance in the underwriting process: A. It allows insurers to lower premiums for policyholders. B. It helps insurers manage large or catastrophic risks by transferring some of the risk to another insurer. C. It ensures that underwriting guidelines are followed strictly across all policies. D. It reduces the number of claims filed by policyholders. Answer: B. It helps insurers manage large or catastrophic risks by transferring some of the risk to another insurer. Explanation: Reinsurance allows insurers to manage large or catastrophic risks by transferring part of the risk to another insurer, known as the reinsurer. This helps to limit the insurer's exposure to potentially devastating losses from a single event. While reinsurance may indirectly affect premium rates, its primary purpose is management, not premium reduction. Question 21. In the underwriting process, which of the following would most likely be used to evaluate the financial stability of a commercial applicant? A. The applicant's criminal background, check. B. The applicant's credit score. C. The applicant's annual revenue and balance sheet. D. The applicant's previous insurance claims history. Answer: C. The applicant's annual revenue and balance sheet. Explanation: To evaluate the financial stability of commercial applicant, the underwriter will primarily review the applicant's annual revenue and balance sheet. These financial documents provide insights into the applicant's financial health and ability to recover from potential losses. Criminal background checks, credit scores, and claims history are important but not as directly related to financeability. Question 22. Mr. Taylor applies for life insurance but has a family history of heart disease. What would be the most likely outcome of his application? A. Mr. Taylor's application will be automatically denied due to his family history. B. Mr. Taylor will be offered higher premium due to his increased risk. C. Mr. Taylor will be asked to undergo a series of medical tests before approval. D. Mr. Taylor will be approved without any consideration of his family history. Answer: B. Mr. Taylor will be offered a higher premium due to his increased risk. Explanation: Having a family history of heart disease increases Mr. Taylor's risk for developing similar health problems, making him a high-risk applicant. Therefore, he will likely be offered life insurance, but at higher premium to reflect this increased risk. Medical exam may also be required, but the primary outcome would be premium adjustment. Question 23. Which of the following would be considered an underwriting criterion for a life insurance policy? A. The applicant's criminal history. B. The applicant's occupation and lifestyle choices. C. The applicant's driving record. D. The applicant's educational background. Answer: B. The applicant's occupation and lifestyle choices. Explanation: In life insurance underwriting, the applicant's occupation and lifestyle choices are critical factors. Certain occupations, such as those in hazardous industries, and lifestyle choices like smoking or dangerous hobbies, can increase the risk to the insurer. These factors help the underwriter assess the likelihood of claims. Criminal history and driving record are important, but occupation and lifestyle are more directly linked to mortality risk in life insurance. Question 24. An applicant for homeowners insurance lives in a neighborhood with high crime rates. The underwriter should be most concerned about which type of hazard: A. Moral hazard. B. Physical hazard. C. Financial hazard. D. Legal hazard. Answer: A. Moral hazard. Explanation: In this case, a high crime rate in the neighborhood increases the likelihood of theft or vandalism, which poses a moral hazard. Moral hazard refers to situations where the insured may take fewer precautions or engage in riskier behavior, knowing that insurance will cover the potential losses. Although physical hazards may also be a concern, the risk is primarily tied to behavior influenced by the environment. Question 25. When underwriting a commercial insurance policy for a factory, which of the following would be considered a key factor to evaluate? A. The factory's location and proximity to fire hydrants. B. The factory's environmental impact. C. The factory's age and historical significance. D. The factory owner's credit score. Answer: A. The factory's location and proximity to fire hydrants. Explanation: When underwriting commercial property insurance for a factory, the underwriter would focus on factors that directly influence the risk of property damage or loss. The factory's location and its proximity to fire hydrants are crucial because they affect fire safety and response times in case of an emergency. While environmental impact and historical significance are important, they do not have the same direct impact on underwriting decisions as fire safety measures. Question 26. A life insurance applicant has a history of multiple hospitalizations for chronic conditions. Which of the following actions should the underwriter take? A. Approve the application without further review. B. Require additional medical records and possibly a medical exam. C. Automatically decline the application due to medical history. D. Approve the application but impose a waiting period for coverage. Answer: B. Require additional medical records and possibly a medical exam. Explanation: given the applicant's history of chronic conditions, the underwriter should request additional medical records to better assess the applicant's health risks. Medical exam may also be required to gather more detailed health information. This helps the underwriter make more informed decision regarding the policy's approval, terms, and premium rates. Question 27. In underwriting, which of the following would be most likely to trigger an exclusion for pre-existing conditions in a health insurance policy? A. A medical procedure required after the policy has been issued. B. An injury sustained in an accident covered by the policy. C. A health condition that existed before the insurance application was submitted. D. A wellness checkup performed during the policy underwriting process. Answer: C. A health condition that existed before the insurance application was submitted. Explanation: pre-existing conditions are health conditions that existed prior to the issuance of a health insurance policy. If an applicant has a pre-existing condition, it is typically excluded from coverage during the underwriting process unless specified otherwise. Health conditions diagnosed before applying are a key factor in triggering exclusions or waiting period. Health insurance policies. Question 20. Which of the following would be most important for an underwriter to assess when determining an applicant's home insurance eligibility? A. The applicant's income level. B. The home's proximity to hospital. C. The home's construction type and condition. D. The number of people living in the home. Answer: C. The home's construction type and condition. Explanation: when underwriting home insurance, the condition and construction type of the home are critical factors. These elements directly affect the risk of damage due to perils such as fire, weather, or accidents. Homes built with fire-resistant materials or those in good repair are less likely to experience significant losses. The applicant's income or the proximity to hospital are less relevant in eligibility. Question 29. What is the purpose of using a risk classification system in the underwriting process? To ensure that all applicants receive the same premiums. B. To group applicants into categories based on their risk level. C. To eliminate high-risk applicants from the underwriting pool. D. To provide discounts to low-risk applicants. Answer: B. To group applicants into categories based on their risk level. Explanation: risk classification systems are used by underwriters to group applicants based on their risk level. This classification helps determine the appropriate premiums for different groups of policyholders. Applicants in low-risk categories will typically pay low premiums, while high-risk applicants will face higher premiums. It helps the insurer balance the risk exposure and pricing for different types of policyholders. Question 30. Which of the following would most likely lead to a denial of a commercial property insurance application? A. The property is located in an area prone to earthquakes. B. The applicant has a poor credit score. C. The business has a recent history of minor property damage claims. D. The property lacks fire alarms and sprinklers. Answer: D. The property lacks fire alarms and sprinklers. Explanation: in commercial property insurance, the lack of fire alarms and sprinklers is a significant concern because it increases the risk of severe fire damage. Insurers often require certain safety measures to be in place before approving coverage, especially in businesses where fire risk is high. While factors like poor credit or minor claims history can influence the decision, the absence of crucial measures like fire alarms and sprinklers is a more immediate risk factor.